What's up, everybody? This is Jimmy with TradingView. It is May 2nd, 2025. It's Friday. What a great day it was. Before we get started, buy my book, join my Discord community. Links are down below for both. And just a reminder, tomorrow we're doing another Let's Talk About It live YouTube live YouTube session. The topic of tomorrow's discussion will be trade plans and why they are necessary for your success as a day trader. We'll cover what they are, how we create them, and why we need them. And that's pretty much it. So without further ado, let's go ahead and take a look at the charts, which weren't the greatest today, but we found some trade opportunities. Very quickly, I'm not trying to waste your time, and quite frankly, I don't want to make this video today, but I love you guys, so I'm going to do it. We had a call line at 486.96. We had a put line 486.38. Now, leading into the open, I was initially looking for puts, but I told everybody, just like our normal rules, guys, puts are on the table as long as we're staying below that trend line, and I want to see ADD pushing down at the open. Not only were we not below the trend line by the time we opened, remember, we're doing the call put scenario 5 minutes before the open. So before we closed above that line, everything looked good for a potential move to continue down to the next support. We weren't looking for a big move. We're never looking for a big move. These are quick, aggressive trades. They work very often, but you have to be quick and you have to be prepared. But more importantly, you've got to be comfortable with what you're doing. Otherwise, no trade works well. Anyway, so puts were not a thing. Didn't mean I was going to jump into calls aggressively. Now, unfortunately, I didn't get into calls when we did crack the call line. ADD was printing green. I waited until the next candle, which on the Qs was a much bigger move than it was on SPY. All we were looking for was to get from this line of resistance up to just above the pink the pink line, which was the next resistance up. That happened very, very quickly. We got in, we got out. That was it. Not a huge winner. I didn't even calculate the percentage on it, but it was a winner nonetheless. Now, if you didn't feel comfortable with that, I'm starting to try and focus a lot more on Confluence. At the time, we had wicks on the bottoms of the two candles preceding the one I entered on. We were above support and ADD was printing green. That's it. There was nothing more to it. I was hoping we were going to break resistance A and make it to resistance B. That was the trade. If you don't see it or you don't like it, you don't trade it, okay? I share my thoughts. I share my expectations of price action, what I think is going to work, where I think it's going to go, and why, which is the most important part. Why do I think this is going to happen? It's not because I necessarily need to make money. It's because that's how price action works, and that's the part I'm trying to teach you. With that said, we rejected pretty hard up there at those respective resistance lines. Big wicks on top. Not looking for anything here. Jimmy, would you take calls if we got above the pink line? No. Why? Because ADD moved up a little bit more, but then it started to rotate to the downside. So now calls are a little bit less likely to be aggressive on, with ADD going against us at the time. But the first time we got to the put line, which was at the open, we had negated that because we closed on the other side of the trend line. But as we were coming down to it again, I had said right here on this candle, after these two wicks, I said, guys, that was a pretty nasty rejection. There's definitely some sellers up there. And oh, by the way, ADD is now starting to print red. I like this more to the downside than to the upside. I ended up taking the put scenario as well. Our target for that was this guy right here. It blew right through it and made it right down to the next target, which was right here. And as you can see, it was on that next candle. I actually marketed out of this thing somewhere during the printing of this because SPY was getting too close to the pink line. This is supposed to be here. And Qs were near support anyway. So for me, I felt comfortable taking my profits out there. And I'm glad I did, because we just discussed shortly thereafter how if you didn't take your profits down there and you stayed through that candle, you probably became a hold and hoper, which we don't like to be in that situation. But Jimmy, would you buy calls if we cross the call line this time? I said, guys, I'm not looking for calls if ADD is still trending down. The market was very green, so I wasn't aggressively trying to take puts, but at the same time, look at what happened the last time we got up in here. Didn't work out so well. Look at what's going on the chart preceding us getting back up here again. On both charts, we were struggling in that area to continue up, but ADD was still moving down. No reason to be justifying calls there, in my opinion. Instead, guys, this is a really strong resistance. There is not a better time to consider a put than when ADD is moving down and you're at a resistance level on both charts. Okay? And on SPY, we were putting in lower highs. So SPY and Q's charts were disconnected a little bit today. But lower highs on SPY, ADD's crashing down. I'm looking for puts, not calls. When do we want to take those puts? Well, if you take it up here at resistance, we know that if we close above it, we stop out. Where are we hoping this to go? Well, first of all, we hope to get through this support here. So the reason there's an arrow here and here is because, well, we're at a very strong resistance. Lower highs on SPY, ADD is still coming down. Aggressive entry here, more conservative here. All we wanted to do was hold resistance and break support. If we break that support, where do you think we're going to go, Jimmy? To the next support down, which is right here. We got there and moved a little bit lower. Now, I'm not here trying to squeeze every drop of juice out of every trade. So if you don't hold on that long, it's okay. If you do, just have a good reason for it and know where you're going to get out if it doesn't get down to where you want it to go. That's it. The next trade that we saw, we put in higher lows here. We moved up. I said I wouldn't buy calls up in this area because I don't like what happened previously there. But what started to happen as we neared the bottom? Well, we started to print some green. I told everybody, hey guys, this is a higher low here. I'm not sure if I'd feel comfortable buying this. I'd rather that we get above this orange dotted line. But if you don't care or your feelings aren't affecting you or you just want to follow sheer price action, higher lows, this was our second one, is more likely to break resistance. What does that mean? If you're not willing to take calls, I'm telling you, so you don't consider puts. Okay? Just because you don't want to take calls there might be a reason for it, but at the same time, higher lows are bad for puts, so at least stay out of puts too, right? Just because you're not willing to take calls doesn't necessarily mean it's time to take puts. Sometimes that's the case, but not in higher low situation. Okay. Then ADD started to print big green candles. At this point, there was people who took this trade. In fact, somebody said, Jimmy, can you ask Steve to give us a pullback? Well, the pullback was to old support. Old resistance turned support. There's your entry point. Okay. Now, pink line on the SPY was your support. Old resistance, support. Support here, old resistance, new support. And then ADD started to print green. It was a little bit of a battle here. And I'm telling people, because somebody in my group said, man, I'm really wanting to buy puts here. I said, listen, I see the argument for it, but the rules, man, you got to respect the rules. You can't pick and choose when the rules should be a thing and when they shouldn't. Okay, now today, following my rules, I missed out on a couple of great trades that I didn't take because I would have had to break rules to do it. You got to be cognizant of that, guys. You can't just shift around when the rules are important and when they're not. You have to stick to your rules. The rules are your rules because they usually result in winning trades or usually keep you out of losing trades. So don't cherry pick when to do this and when to do that, sometimes and not other times. So for me, puts are not a thing. As much as I could argue that we're at a strong resistance, SPYs hasn't cracked above that area that it was struggling to get through earlier. Qs are at resistance. I mean, it looks good to the downside, except for ADD and except for the higher low. So it's equally as important in my job to keep you out of trades that are less likely to win and help you spot trades before they're worth taking to consider taking. Okay, so higher low here. This is more likely to break up, not down. Use that information as you will. If ADD is printing green, I fully believe we're going to move up through resistance and make it to the next resistance. It happened, okay? And then we put in another higher low right here, which would have been a much more comfortable trade, okay? So we got through resistance here, came back, held it as support, also another pullback, which somebody was asking if this is a good place to do it. The answer was yes. And we expect this resistance to break because of this higher low. ADD's printing green. We get it right up to the next line. We pull back once again to the same support area right here. off of a pullback. There was no lower high put in here. Would you buy this pullback? I'm not trading anymore, but it is a pullback to support on both charts. And if that's the case and ADD is moving up, which it was, we'd be aiming for the same resistance we just came from. So that was the last trade of the day prior to the last one, which we found way before it became a trade, because we started to move more sideways. ADD started to move sideways, which Q started to move sideways, and all the stuff. So during this time, we talk about psychological parts of trading and all kinds of other things. But people say, lo and behold, Jimmy, where would you do this? When would you consider puts? When would you buy calls again? Blah, 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 blah. I said, listen, at this point, I've lost my confidence in the chart. So what I would need to see for calls and what I would need to see for puts. Again, these are things that I plan out. It might take a minute to happen. It might take an hour to happen, and it may never happen. And then there's actions that you take based on those things. You either take the trade because the things happened, or you don't take the trade because they never happened. Okay? You just got to be disciplined. Okay? So I told everybody, I probably wouldn't take calls unless the Qs were above 488.89, ADD was moving up, and I want SPY above 566.36. So 3 criteria needed to be true. Qs and SPY needed to be above a specific level, and ADD at the time needed to be moving in my favor. That's it. If it happened, great. If it didn't, there was no trade for me. Likewise, to the downside, and somebody was holding on to a trade as we were moving down here, I said, listen, I wouldn't touch puts. And again, we were talking about this way over here when we were moving sideways. Until the Qs are below our original call line, which is 486.96, I want SPY below this orange line of 564.64, and I want ADD trending down. Very simple. It's the opposite rules as I want to see for the upside. Well, as luck would have it, for me, we never got down there. Not that I was going to take it. I was already done. I took 2 trades. And the reason I took a second trade today is because my first one didn't produce a very big win, because it was a quick, short move on SPY, although it looked to be a much better move on the Qs. Didn't work out greatly, but it worked. Nonetheless, I told this gentleman, I said, listen, I know your inputs. He just got into them fresh right here, and he wanted to get all the way down to our put line, our call line down here, this white line. I said, listen, the reason I said I wouldn't be considering puts until we got down to through this white line is because look at what happened between these 2 dotted lines. Once we got above this area, we never successfully closed back below it on the day, and we still haven't. I said, if you're in profit and we come down to that point, I would really consider taking myself out of this trade, or at least tightening up my stop loss. As unfortunately, we dipped into that area just like we did every other time in here, and we failed to move lower. ADD instantly started to print green candles, and he got himself out of the trade with a loss. And unfortunately, it took away from some of the green he had already made for the day. So again, over trading doesn't necessarily mean more wins. In fact, it usually means the opposite. But I want to say that shortly after that trade, we moved up. We put in a higher low. We got through that resistance here on the SPY, on the Qs. We got through that resistance there on SPY. ADD was printing big green candles. Now, this was a news move. But nonetheless, guys, if you were planning for a trade and you knew you wanted to take calls if certain criteria were met, then you were ready for this. Okay? Now, if you weren't and you missed it, it's okay. But the point is, this trade plan was created an hour at least before. In fact, we were talking about it all the way over here. So at 10:30, so an hour and a half later is when it came to fruition. All right. So the point is, you should be able to see these trades. You guys hear me say it all the time. No trade should ever sneak up on you. Trade plans, super important. They're not hard to do, but they're necessary. Why? Because during a trade plan, and we're going to talk about this in depth tomorrow, a trade plan allows you to be prepared emotionally and mentally for all aspects of any trade that you're willing to take or consider taking. You know where you want to get in because that's part of your plan. You know where you want to take your profits because that's part of the plan. You know what risk you're willing to accept and where you're going to stop out if that risk doesn't result in a reward. And so there should be no surprises during the trade. The surprises start when you deviate from the plan and you're flying by the seat of your pants. That's how we get in trouble. Okay? So with that said, I hope you all had a fantastic day today. We had a nice winning day in the markets today. And I hope it stays that way for those of you who are continuing to trade all day long. It's not a winning proposition. Sometimes it works. Most times it doesn't. But with that said, if you found some useful information in this video, please like, share, and subscribe. If you'd like to join our Discord, as I mentioned earlier, the links are down below. Consider buying my book. It's good stuff in there, I promise. And protect your capital. Have a great weekend if I don't see you tomorrow morning. And for the rest of you, I'll see you on Monday. Love you guys.